Today we had some really interesting jobs data that came out that threw some drama into the picture when it comes to the outlook for rate cuts. Let's talk a little bit about it. So average hourly earnings came in higher than expected on a year-over-year basis. This shows wage growth is strong, and so people are getting raises, which, you know, that's a great thing for the people who are getting raises, don't get me wrong. But in terms of an inflation story, wage growth leads to more spending leads to more inflation. So it doesn't help with the idea of getting inflation under control. So wage growth was strong, but so was the jobs numbers added. 272,000 jobs were created compared to the forecast that was just 185,000. Now, on top of this, they also slightly revised lower the previous one, but the big story here is that we had a lot more jobs added than what was previously anticipated. Finally, unemployment rate did tick higher up to 4% here today, and overall, the market took this as kind of a stronger than expected jobs report. I also wanted to show you this FedWatch tool, the latest update in terms of expectations for the first rate cut this year. Now, what we see here is that if we take a look at September for the US, there's only a 55% chance, let's call it, that we see our first rate cut. This is down from where it was previously. What we see now is that the first confident rate cut isn't coming until November, which actually got pushed back. And we've seen these numbers shift back and forth, but with a strong jobs report, this is a very key statistic and also suggests that perhaps the upcoming CPI numbers and inflation numbers could be stickier than what was previously anticipated, despite recently we've seen a slew of kind of cooler than economic data. We'll talk about that in just a moment. First, let's go over some of the reactions here in price action to the numbers. The S&P 500 dropping, just about 0.3%. Nothing crazy here, at least at the time of recording this. At the NASDAQ level, we also see just a slight drop. The Dow Jones, kind of mixed. The Russell did not like this at all, as small cap companies are more vulnerable to higher borrowing costs. And with inflation staying sticky due to jobs data being strong, we could see the Russell continue to struggle. Also, while I'm on the subject of the 2,000 stocks that make up the Russell 2000, I wanted to also mention a CFD broker that is, of course, today's sponsor, Vantage. And Vantage Markets, if you have not already heard of them, is a wonderful brokerage to check out. They offer CFDs for many different indices, both US, abroad, also individual stocks, and so much more. There's a deposit bonus linked down below in the description if that's something you'd like to check out. This is available for people who are outside of the US. Again, you can trade things like the US Small Cap 2000 Index or the Russell, which I think is very unique. Most brokers don't offer this, and I love being able to trade the Russell myself. So if you're somebody outside of the US looking to trade the Russell, check this one out. Again, Vantage linked down below in the description. Highly recommend that you go through, see if the broker is right for you, do your due diligence. And if you're interested, again, take advantage of that deposit bonus that you can find out more information about in the description down below. Now back to the video. The VIX continues to be very, very low at just 12.66. The dollar index is jumping strong off of this support level around the 104 mark. And this makes sense because, again, jobs data strong means that the US economy is showing some strength, and that strength does equate to the dollar looking stronger than its peers. And the big loser for today is actually gold, where gold is trading down at 23.18 at the time of recording this. A big drop here off of this economic data coming in stronger than anticipated because, again, it pushed back the idea of when rate cuts could start to come into the picture. Rate cuts, very important for bullish price action on gold because, again, it includes a weakening dollar. Remember that a dollar index strength move is exactly going to usually be opposite to gold because, again, gold is quoted in dollars. If the dollar is stronger, it buys more gold for less, so on and so forth. You get the point. Now, big loser here also today is down 5% on silver and oil. I do have a short position on this one. Oil is overall down here recently, but has had a pretty strong rebound in the last few days. I'll just give you, while I'm on the subject of oil, my overall thoughts here. I have a stop loss trailed into profit here, floating around $1,100 on this position on 300 shares that I have shorted on USO. This is a oil ETF. Thought process on this is that if we break through this resistance point here, I will stop out and take a profit on this. Otherwise, if we can respect this and continue lower, if oil continues continues to trend down on slowing economic data, I'd really like the story for continuing to hold on to my short position. And yields are jumping up here, both on the 2, 10, and 20 year, and which is not helping my TLT position, which is now again back in the red. This thing has just gone back and forth sideways. But one positive is that I have actually been able to collect some pretty good dividends just holding on to this position over time. TLT does pay a dividend, and if you don't know how to do that on TradingView, you can actually scroll down here and you can see the dividend yield is 3.59%. It pays out quarterly, so I've collected, some good dividends just holding on to this. Now, I wanted to circle back to something I mentioned earlier in the video, this idea of a slew of economic data or a kind of trend of cooling economic data. Let's talk about it. So first of all, I wanted to show you the GDP numbers. So GDP numbers here have 2 times in a row missed forecasts by a pretty wide margin. So economic growth out of the United States is very important for company earnings and for, again, the strength of the dollar. So recently we've seen the dollar index trending lower, and it makes good sense when you look at some of the data points that I'm going through here. So if we take a look at GDP growth, it's come down lighter than expected in the last 2 reports. PMI data also has some mixed sentiment here. If you take a look at manufacturing PMIs, the numbers actually come in worse than expected. So forecast was 49.8. We instead saw 48.7 on that number. Then you take a look at services PMI. Services actually was more impressive. It came out higher than expected, and we can hover over and see this data point here. The forecast was 51. We actually saw 53.8. Remember that a reading on PMIs above 50 shows expected expansion, and a number below 50 is expected contraction. So we see contraction in the manufacturing and expansion in the services. Retail sales came in lighter than anticipated, though this data is a little bit old. May 15th was the last one we've got. And here's the latest jobs data that we saw today. Again, stronger than expected. So this is actually a bull case for the dollar index. Unemployment claims have overall started to trend higher. So claims for unemployment are rising. JOLTS is steadily trending down. This is job openings. So job openings are coming in lighter and lighter, which again, showing some cool down in the economic, strength. Unemployment rates continue to trend higher. We actually will see once this updates a 4% reading, but it has not yet come in. So anyways, 4% will be the latest. We see wage growth in the US also kind of, staying in there overall. And if we take a look at CPI inflation reports, we can take a look at this. So my point was showing you all that is that the overall economic trend seems to be pointing more south than north, if you will. The idea basically being that economic data points are coming in light, and that light economic data point trend is leading me into a couple specific areas. I like the idea of staying long gold and staying long bonds. I already own TLT, and I will be looking for a potential setup on gold. If I take that trade, it'll be shared inside of the Discord group, which is linked down below in the description. And what also is linked in the description down below is the last chance today to get 25% off of the Edge Finder. We're doing a discount this week, a flash sale for 25% off the tool. If you have not already picked up a copy of the Edge Finder and you'd like to be able to use the same tools that I do, the Edge Finder is my company, A1 Trading's flagship software tool for traders trying to incorporate fundamental analysis into their trading. It is a daunting task, and if you'd like some help with it, we'd be more than thrilled to share our tools with you. Of course, there's a cost associated as we spend a ton of money and time building these things, but if you'd like to pick it up at a discount, today is your last chance, 25% off by clicking the first link down below in the description. You'll be connected to a real person on my staff who can help get you a copy today. Thank you very much for watching. We'll see you next time. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.